Hey guys, just want to do a quick trade recap of the EURUSD short that I took yesterday. So this is a trade here. When price hit 5R, I closed 80% trade volume and I secured 4% from this trade as I risk 1% per trade. So I managed to pull 4% from this trade. The remaining 20% volume, as you can see, came up and hit break even during the Asia session last night. So what was the steps taken to enter this trade? So what I'm going to do is use bar replay. Let's just remove this price action just here. And no, to tell you what, let's start with over here. Now what we've got going on, I was looking at a POI just here, and as you can see, we did have some liquidity being printed, so this is something that could still be swept later on in the future. But what did catch my eye was this POI as this was formed. So when this was formed, we can see, if we just advance price forward a little bit more, we can see we actually swept through this POI, which I think, if I remember rightly, was an hourly. No, this might have been the 4-hourly POI. Yeah, this was the 4-hourly POI. So we did sweep below this, and it does look like that this POI here did have enough momentum to sweep beyond a 4-hourly POI. So this was something that was catching my interest. So if we also drop down to the 5-minute, what we can see is we've actually got some traps setting up along the way. So we've got our 15-minute refined here. We've then got a trap zone here on the 5-minute. We've also got another one here. So these internal points are areas of liquidity, and they would have been inducing traders into early buys or sells, sorry, early sells in this case. And that's what we'll actually have a look at for this trap zone in particular very shortly. So this is where I was also looking at my liquidity inducement candle, was this point just here. I actually used a 5-minute liquidity inducement candle, and I'll show you why. Because if we see how the candle is just here, we've then got a trap below it, which is one of the requirements we need for the lick, either a trap or some liquidity. We could then see on the 3-minute that if we was to use this last buy before the sell, there's probably maybe 1 or 2 pipettes difference in the price. So I wasn't really bothered about trying to, refine it for a sniper or anything like that, because we don't always take a limit order straight off the lick. Again, on the 2 minutes, very similar pricing. And then on the 1 minute, what we can see, again, still quite a similar pricing level, but we've just got this area of consolidation here. So I was just quite content with leaving it as a 5-minute lick candle. And then if we have a closer look, if we was going to have our, well, my stop loss was about 5 pips. So if we measure 5 pips away from there, we can see we've got plenty of breathing room for this trade. So let's have a closer look at the trap zones and the build up to this trade. So what we can see, let's drop down to, let's go to the 1 minute. So what we can see, as price was entering or coming up to our area of interest where we're looking to take a trade from, we have this trap zone just here. Now this trap zone is an area that we were looking at as a trap to induce early sellers into the markets, and I've had many people tell me that this is exactly what they would have been doing before looking at the LSM. So what we can see has happened here. We've got a break of structure. Now as soon as we've had this break of structure, we've then had a further push to the downside, causing a shift in market structure, a chalk, whatever label you want to put on it. Shifting market structures, chalks, flips, they all have the same outcome. They're reversing price, and this would have been kind of like an inducement point to encourage traders to get into this change in the market direction. Now an area they would have been looking at would have been somewhere around maybe here for their entry, and as you can see, as prices then come down, it would probably would have tagged them in, it would have pushed down for a short period of time and then pushed up and then taken them out. Now this is something, like I said, we do see this quite often, is when traders are looking to trade the LSM approach that we do. This is something that they would have been doing quite frequently before, jumping into an early trade and not waiting for a further mitigation of what's going on above or below their POI. So what we can see is this was quite clearly a trap, and as we had a push to the upside, we could then see we've now created a divergence. Now if we look down here on the divergence indicator, we can see we've got a high, a lower high, and a lower high. Up here we can see we've got a high, higher high, higher high. We've then had a lick mitigation. We've had a push to the downside. We've then had our shift in market structure here. I was content with looking for a 1 minute shift in market structure, just purely because of how price action was developing. And what we then had was a newly formed POI around here. And once we've had this mitigation, this is when I was looking to take a market execution. So once I took the market execution, we can see we've then had a further break of structure. We didn't really get a candle close until it was around this point. And from, if you know my trade management, if you've been part of the LSM, you would know that I set stop loss to break even around 1R or the first break of structure. So stop loss was set to break even quite quickly because we did have a nice reaction from here. So it was around about this sort of level where I've got a stop loss to break even. And as you can see, we did have price come back up, but this high that was formed just here looks like it was just trying to mitigate something within here, maybe clear a little bit of this imbalance, or let's go back here. I think on the 2 minute, it does look like it tried to, yeah, we've got this candle just here. It does look like it came up a level with this. So yeah, it almost hit break even, but we then had a further push to the downside. Now, for anyone that was trying to get into this trade, and for those that would have been waiting for a 5-minute shift in market structure, what we can see here is where we've had this break of structure on the 1 minute. This is where the shift in market structure could have been. If this looks a little bit aggressive for your liking, you could have then waited for something like this, where we've had this break of structure just here, and then we've got this POI around here, which is a little bit clearer on which time frame was it. I think we've got a nice POI here on the 3. Let's have a look on the 1. I think the 3 minute would have been a little bit better, but we do have some POIs around here, which would have been a good point to be looking at. I think this point just here. So for those that were waiting for their 5-minute shift in market structure, we could have been looking at this POI that was left behind because there was nothing left to mitigate above. It does look like we had a sweep of liquidity just here, but if you was to have a 5 pip stop loss like I do, you would have been in a good place. You would have given yourself some breathing space for this trade setup, and you would have been able to get into the trade around here if you're waiting for this 5-minute shift in market structure. So yeah, guys, this is the trade entry. This is where you could have got in if you had missed it. And from there, like I said, the rest of the trade then hit break even after I took partials, and the break even hit during the Asia session. And I'm quite content that it did that during the Asia session. There's no way I would have been holding any sort of risk at all during the Asia session when I'm fast asleep. So that's the trade setup. That's how I took the trade. That's the confluences I used. If you guys have any questions at all, feel free to reach out.